It's 8:23.5. Let's go over to Tokyo and see what Nick Smith, Japan strategist at CLSA, thinks about all these market movements. Morning, Nick.
Good morning, Jim.
So let's get your thoughts, first of all, on what we've seen overnight on Wall Street. Some extraordinary volatility. We were saying earlier, the biggest intraday swing since 2008 for the S&P 500. We've never seen before the market fall 4% and close positive territory. What's driving all this volatility?
Well, the market's on not quite unprecedented valuations, but it's certainly very, very stretched indeed. And growth does well in times of growth stocks do well in times of low growth, low inflation, low yield, and we've got all of those three things coming back now. So people are moving towards things that pay a yield. So. If you're not paying a yield, you might as well be punting Bitcoin, and so I think there is an attraction for markets that actually have actually pay yields and trade at more reasonable valuations.
So where does Japan fit into that? Are you seeing the same process there as well? A rotation now out of growth stocks into value plays?
Well, it depends what you mean by value. Certainly, a lot of unloved stocks have seen short covering and so on as we come into this year, and a lot of people run around saying, "Oh, we can recommend low price to book stocks that don't cover their cost of capital." But actually, if you look at the performance of the market, what's going up is particularly those things that pay a decent dividend yield. That's much more important a theme than the low price to book. But I have been focusing on the fact that Japanese low valuations come at a time when the country is absolutely awash with cash. And so whilst other markets, particularly the US, have been had a rush of share buybacks to try and support stretched valuations, Japan has kept its powder dry and has been accelerating its buybacks now as the valuations are very low. So we've got 40% of topics non-financials with net cash of over 20% of equity, which I would say is a pretty egregious level. That's the huge amount of dry powder that can come into to buy back shares now.
So then, if this theme is going to run and people are going to start looking more at value plays, and as you say, Japan is really the standout market globally for value, why aren't investors pouring into Japan? What's holding them back? Because the Japanese market has suffered almost as much as the US markets in the past week. Why aren't investors seeing this?
Well, I mean, it is the easiest market to trade in Asia. So when you've got worries about growth, people tend to punt in the Japanese market and pull money out of that, just simply because it's harder to get their money out of other markets.
Okay, so if you look at Tokyo at the moment, all the cash on the balance sheets, presumably what they should do is buy back their own shares.
Well, there's a mixture. I mean, obviously, they've also got to think in terms of hiking their dividends, which gives, if anything, a warmer feeling for investors, because they believe that dividends are something that they'll get every year, whereas buybacks are just fine weather things. But yes, that's as you went through last year, you could see, compared to previous years, the growth rate accelerating as we went through the year, until we had something I'd never seen before. In the 20 years since buybacks have been allowed in Japan, I've never seen them do more buybacks in the second half of the year. At the fiscal mid-year phase in November was absolutely enormous in Japan, and I think that gives you a lot of confidence that when we get to fiscal year-end reporting, which is late April, early May, we'll have a thumping load of share buybacks, and that will be the kind of noise that wakes the neighbours and gets money into the Japanese market.
And I presume the other thing that's going on, the other theme, is rising bond yields around the world, government bond yields. Presumably that helps Japan's market as well because you've got strong earnings growth there.
We have. I mean, obviously that's been the issue for Japan for a long time. It's had much better margin expansion than the US over the period since 2012, but it's had multiple compression. I think it's now a standout market on valuations, and I think Japan is a play on the accelerating global growth, the good global growth that's reflected in bond yields really helps.
And what are foreigners doing? Are they starting to buy this market, or have they been buyers of this market?
Well, I think the lows in terms of foreign involvement was about September of 2020. So they've been on a upward trend since then, but it looks as if they've been selling over the last week. We don't have figures yet, but the kind of things that have been sold off are certainly foreign favourites.
I'm still sort of struggling to understand why people aren't ploughing into the Japanese market, because from what you say, it ticks so many boxes at the moment in terms of value and where you ought to be looking. Is it a political issue? Because we know that, for example, earlier on, Prime Minister Kishida suggested he didn't really like buybacks. Has that sort of like put people off? Is that maybe one of the issues?
I think people have to remember that we have a prime minister, not a president or a king, and that he's responsible for everything but has power over very little. So he's made comments about capital gains taxes and share buybacks, and I think that the market's learning to roll its eyes when he makes these comments and saying, you don't have the power. The power in the Liberal Democratic Party is more with the Abe faction, and he's from a tiny faction, so he poodle begs for everything that he can, but that he's not going to be given that. No, I think the point is the foreigners are up to their noses in very expensive quality growth stocks in Japan, and first they're offloading that, and then when global markets are stabilizing, then they can thump in and buy some value and some high dividend yield.
Okay. Well, Nick, always good to talk to you. Thank you very much. That's Nick Smith, Japan strategist at CLSA in Tokyo.